Welcome to Global Byte. Please subscribe and hit the bell icon for more breaking updates. On April 15, 2025, China ordered its airlines to halt all Boeing aircraft deliveries, a move that reverberated from Seattle to Shanghai, sending shockwaves through the global aviation industry. The announcement was sudden, but its impact was immediate and far-reaching, touching not just the companies involved, but also governments, workers, and travelers around the world. This wasn't a minor business hiccup. It was a calculated escalation in the US-China trade war, targeting one of America's most iconic companies. Boeing, a symbol of American innovation and industrial might, found itself thrust into the heart of a conflict that had been simmering for years. Boeing, the nation's largest exporter, suddenly found itself at the center of a geopolitical standoff. The company's future in one of its biggest markets was now uncertain, and the ripple effects threatened to disrupt supply chains and business relationships built over decades. The directive was sweeping. Chinese carriers were told to stop buying U.S. aircraft equipment and seek special approval for any scheduled deliveries. This meant that even existing contracts were thrown into limbo and airlines faced the prospect of grounded fleets and delayed expansion plans. The fallout was immediate. President Trump confirmed the news on social media, calling it a betrayal, while China's Commerce Ministry vowed to fight until the end. The diplomatic language quickly gave way to open threats and warnings, as both sides dug in for a prolonged confrontation. These sharp exchanges weren't just rhetoric, they signaled a new phase in the economic conflict, with Boeing directly in the crosshairs. The company's leadership scrambled to assess the damage, while negotiators on both sides braced for a long and uncertain road ahead. Billions in revenue and thousands of American jobs now hang in the balance. For workers on the assembly lines and engineers in design labs, the uncertainty was palpable, as the prospect of layoffs and production slowdowns loomed large. The halt throws the future of US-China trade into question and puts the global aviation industry on edge. Airlines worldwide began to reconsider their fleet strategies, and investors watched nervously as stock prices fluctuated. As the world's two largest economies dig in, the fate of Boeing in China could become a bellwether for the next era of global commerce. The outcome of this standoff may set the tone for future business between East and West, influencing everything from technology to finance. The skies, once a symbol of connection, have become a new front in a high-stakes rivalry. What was once a seamless network of global travel is now a battleground for influence and power, with consequences that could last for generations. The world is watching and waiting. As leaders weigh their next moves, the uncertainty lingers, and the stakes have never been higher. To grasp the crisis, look back. Boeing's partnership with China began in 1972, the same year as Nixon's historic visit. For decades, Boeing fueled China's aviation boom, becoming its top international supplier. By the 2020s, China operated over 1,500 Boeing jets, about 40% of its commercial fleet. Boeing projected China would need nearly 9,000 new planes in the next 20 years, a lifeline for its U.S. workforce. The relationship went beyond sales. Boeing invested in Chinese facilities and training, betting on shared prosperity, but cracks appeared after the 737 MAX crashes and a years-long grounding, eroding trust and shrinking orders. Deliveries only resumed in 2024, but the bond was already fragile. Now geopolitics has severed what was once an unbreakable link. The Boeing halt is the latest and perhaps most dramatic flashpoint in a trade war that has been simmering and occasionally erupting since 2018, reshaping the global economic landscape. What began as a series of tit-for-tat tariffs has escalated into a full-blown economic conflict, with both the US and China digging in their heels and refusing to back down. US grievances over Chinese trade practices, ranging from intellectual property theft to forced technology transfers, led to sweeping tariffs, which only intensified in Trump's second term and continued under subsequent administrations. In April 2025, the US imposed a staggering 145% tariff on Chinese goods, aiming to pressure Beijing into making concessions. China hit back with 125% tariffs on US imports, signaling that it would not be intimidated. In this climate of escalating retaliation, China wielded its massive aviation market as a strategic weapon. Boeing, a crown jewel of American manufacturing, was the perfect target for Beijing's countermeasures. With the vast majority of its jets built in the US, Boeing became a symbol of American industrial might, and a pressure point that China could exploit to send a message to Washington. The strategy was clear: inflict pain on the US economy, rattle investors, and force American leaders to the negotiating table. But the move is not without risk. China's airlines also rely heavily on Boeing jets, and a sudden ban or halt in deliveries could trigger operational chaos, grounding flights and straining logistics. The decision pushes Chinese carriers to accelerate orders with Airbus and invest more aggressively in homegrown aircraft like COMAC, reshaping the future of global aviation. Both sides are gambling big, risking not just profits but jobs, supply chains, and the stability of entire industries. The damage is already spreading, with ripple effects felt far beyond the US and China. The front lines of this trade war now run through the world's airports, assembly lines, and boardrooms, affecting workers, travelers, and businesses everywhere. The fallout is just beginning, and the world is bracing for what comes next. When China's order came down, 205 Boeing planes were on order for Chinese airlines, 27 of them completed and ready for delivery. Some jets were literally on the runway, awaiting takeoff, when the halt hit. Major Chinese carriers, China Southern, Hainan, Xiamen, Air China, operate hundreds of Boeing jets, making the ban a logistical nightmare. The directive threatens not just new deliveries, but the maintenance of existing fleets if spare parts are cut off. Trump's response was swift and accusatory. Beijing's was defiant. Boeing's stock tumbled, and the company could only express disappointment, powerless to influence the political standoff. The company is now a bystander, as decades of investment are held hostage by geopolitics. The market's anxiety is palpable. Boeing's future in China is now uncertain. For Boeing, the financial hit is immediate and severe. Aircraft makers get paid on delivery. Now, billions in revenue are frozen, with 27 completed jets grounded and over 200 more in limbo. Boeing faces a cash crunch just as it's recovering from years of losses, tied to the 737 MAX crisis and the pandemic. The company must decide what to do with white-tailed jets built for China, while bearing storage costs and rethinking production rates. The ripple effect threatens suppliers across the U.S. manufacturing sector. Meanwhile, Airbus stands to gain as Chinese airlines shift orders to Europe. Boeing's identity as an American icon, once a strength, now makes it a prime target in global trade disputes. The company's vulnerability is exposed. The impact goes far beyond Boeing's balance sheet. It threatens the livelihoods of 1.6 million Americans tied to the aerospace supply chain. Boeing is the nation's largest exporter, anchoring communities in Washington, South Carolina, and beyond. A production slowdown means layoffs, not just at Boeing, but at thousands of suppliers nationwide. Families who depend on these jobs now face uncertainty, turning a distant trade war into a personal crisis. The pain ripples through local economies, from parts makers to restaurants. Ironically, tariffs meant to protect U.S. jobs are now fueling retaliatory actions that threaten them. The interconnectedness of the global economy is on full display. The human cost of this standoff is measured in lost jobs and fractured communities. The stakes are deeply personal. The Boeing-China dispute is shaking the entire global aviation industry. China's directive halts not just aircraft deliveries, but also the purchase of U.S. parts, impacting Boeing and Airbus alike. Airbus relies on American suppliers for key components, and disruptions are already hitting its European factories. The supply chain is so intertwined that a U.S.-China conflict ripples worldwide, delaying production and creating uncertainty for airlines everywhere. Chinese carriers risk grounded planes if the parts ban is enforced, while other airlines like Ryanair are reconsidering their own Boeing orders. The result: fewer flights, higher costs, and more headaches for travelers. Airlines plan years ahead, but this crisis throws everything into disarray. The trade war's collateral damage is global. The industry thrives on stability. Now, volatility rules. The cost of conflict is being paid by airlines and passengers alike. Industry leaders are sounding the alarm, voicing concerns that ripple far beyond boardrooms and into the heart of the global economy. The aviation sector, already under immense pressure, now faces a crisis that could reshape its future. Airbus CEO Guillaume Faury warns that supply chain disruptions are hurting everyone, not just Boeing. He points out that delays and shortages are affecting manufacturers, suppliers, and airlines worldwide, threatening jobs and growth across the industry. Faury stresses that a trade war of this scale creates only losers, as the aerospace industry is deeply interconnected. No company or country can escape the consequences when global supply chains are disrupted. Ryanair's CEO, Michael O'Leary, bluntly says he'll delay Boeing orders if prices rise, showing that even loyal customers have limits. He emphasizes that airlines are already struggling with high costs and cannot absorb further shocks. Aviation analysts agree. Boeing is uniquely exposed as a U.S. icon, making it a prime target in any trade conflict. The company's reputation and financial health are at stake, and the ripple effects could be felt throughout the global economy. China's move is a high-stakes gamble, risking its own airline's stability to pressure Washington. Chinese carriers rely on Boeing jets for their fleets, and any disruption could impact travel and commerce. Both sides are deeply dependent on each other. China needs Boeing's planes, and Boeing needs China's market. This mutual reliance has fueled decades of growth and innovation in aviation. A complete decoupling is neither practical nor desirable. Severing ties would disrupt travel, trade, and the livelihoods of millions, with consequences that could last for years. The hope is that both governments recognize their mutual dependence before irreparable damage is done. Diplomacy and cooperation are urgently needed to prevent a downward spiral. The world's aviation ecosystem hangs in the balance, with the outcome of this crisis set to shape the skies for generations to come. As the dust settles, the future remains uncertain. Will this crisis force the US and China back to the negotiating table, or deepen the divide? For Boeing, every grounded jet means mounting losses and strategic disadvantage. The industry is watching for any sign of de-escalation, softer rhetoric, eased restrictions, or resumed deliveries. Long-term, Boeing must diversify its markets while China accelerates its push for a homegrown aerospace industry. This standoff could reshape the global aviation landscape for decades. The decisions made now will determine whether the skies remain a place of connection or become another front in a divided world. The world holds its breath, hoping for clear skies ahead.